Hello, agents. Hello, everyone. So as an insurance agent, fixed annuities are insurance products, right? We look at the cost of insurance as well as certain things that can't be violated, such as risk and reward, right? So let's take a look at this current MIGAs in 2015. Here's a hypothetical. Let's say these two things existed, right? So let's take a look here. And we have, let's say there's a compounding interest rate of 5.25 for 5 years. Your $500,000 would go to 645,773. However, if you have 6% interest rate, but it's simple interest, 500,000 would grow to 650,000. It's a 5.387 plus, right? Rate is what it equates to, the same thing. Now, when we see something like this out there, there's more to it. It's so close. They're so close that we're going to go ahead and look deeper, right? Which one is actually going to be a better insurance product, right? So first thing I'm going to do is I'm going to run my type of financial review on it. And I'm going to see these companies both have ratings, and one of them has one set of ratings and another one has another. We look at the admitted assets, this one, and these are numbers in thousands. This one would be a $27 billion company. This would be a $48 million company. And that's what you want to look at. And these all have a Comdex rating and all that. We can get into that real quick. So let's take a look deeper in these ratings. So you have a Weiss rating. So you can see this one company has a very steady Weiss rating. This other company maybe has a decreasing here. You see it's decreasing Weiss rating. So there's something right there to think about. That's an insurance issue, right? Because we're buying insurance. That's a cost of insurance. Here's the AM Best report. You see this one had a little volatility. This one had a little increase, both right there. You can see those numbers. This is a Comdex. This is like, how good is the company overall in the industry? Like, are they in the top 5%, 10%, 20%? Do they even rate? So this one rates in the top, 11%, about an 89 Comdex. This one here, no Comdex rating at all. So there's a couple things you want to look at. Okay, history is very important in this industry, especially with certain things going on in North Carolina right now. So let's go back to this. So basically, you're looking at a difference of $4,000 on a $500,000 premium. The difference between these two, all things being equal, everyone leaving the money to grow, $4,227 difference. That's a 0.845% of the initial premium. So less than 1% spread. So your cost of insurance there is about $4,000 more for this company than, say, this company, if you could get either one, right? So what else would you want to look at when you're evaluating this? This is important stuff here. So they both offer a 10% free withdrawal. So on a simple product that offers a free withdrawal, well, historically, and I've been doing this, remember, almost 25 years, or actually it might be 25 years, historically, simple interest products that have a free withdrawal, that interest walks away. Bye-bye. It just goes away, because if you take your interest that you earned, you can go and earn more. You can earn interest on it instead of having it sit there for the next 4, 3, 2, 1 year without earning interest. So that's not a good thing for the insurance company, because the idea is not to have the money leave. This is where they are kind of making their money on that, right? So having all the interest leave is kind of a dangerous thing. In the past, I've seen companies that have this simple interest free withdrawal provisions pull them eventually because all the interest walks away. Why wouldn't it? It won't be negligent not to move it. Also, you want to look at what's the minimum guarantee. So let's say this one had a 1.8 minimum guarantee and the other one had a 0.5% minimum guarantee. Why is that important? Well, it's only important if you stay, or if something happens. Currently, we have an issue, right, with the bankers, Colorado bankers in North Carolina, right? That's been tied up. People's money's been tied up for over 3 years there. And what they're doing is resetting everyone, even though they're liquid, to the minimum guarantee, and you can't have your money. So in this case, the top one, if it was in rehabilitation, you'd be earning 1.8 in theory, based on what's going on currently, the precedents being set there in North Carolina, where this one, you'd be stuck at a 0.5 point. So better deal, right? Always to have a higher minimum guarantee. Is the strongest guarantee in an annuity contract, by the way, is the minimum guarantee, the absolute strongest guarantee. And again, that's being shown out of North Carolina right now, that is a strong guarantee. Next, the 5.25 product just happens to say, hey, after the 5 years, you could stay, you can go, no less than that 1.8%. Whereas, say, this product may say, oh, well, every time right before the end of the surrender charge or right after the surrender charge, you have a 30-day window. to exit, or otherwise we're going to re-up the whole deal at as little as 0.5%, right? Because that's the minimum. Usually they'll set it a little higher, but you never really know what a company's going to do. So those are a couple things to look at. These are things I look at, not just the rate. I don't just see a 6 and a 5.25. I don't just see 650 and 645. You got to look deeper into this stuff. So yeah, that's my 2 cents on that. Here's some disclosures just in general, but you got to be careful, people out there. It's an interesting time right now, and be sure you know what you're doing and the cost of insurance and how everything works and what are the features and benefits inside the product, not just that number up front. So remember, a 6 might only be a 5.38 when it's all said and done. So be careful out there. Remember, this is insurance, and insurance has costs to it, and they're easy to figure out. And there's quality there. Remember, we have no FDIC insurance, and it looks like, if something should happen to a company, money could be tied up for many, many years based on precedents currently being set in other states. So anyway, happy hunting, good week, and be careful out there. We'll talk to you soon. Have a nice one. Bye-bye.